Short squeeze, short squeeze. Set us free, set us free from poverty,
All
from
right,
poverty.
we're gonna try to do this all in one take. So let's get into it. Today is Sunday, November 16th, West Coast, 11:45 a.m. as I'm recording this. On Friday, we had GNS Genius Group file a federal securities class action lawsuit against Citadel Securities and Virtu Financial for alleged market manipulation. Now, I know most people think that most lawsuits go nowhere, but I believe Genius Group has a great opportunity to change the market integrity in a good way. Okay, we used to have this thing called CAT system. Okay, so a CAT system is basically think about tracking of data, right? Tracking trades, short failure to delivers, rehypothecation. It tracks trades, right? It tracks data. Unfortunately, what ended up happening was it got declawed or defunded in a way. So this is an article from the American Securities Association, and it speaks a little bit about the CAT system. Um, it basically states the Obama SEC handed off the job to build the system to stock exchanges and self-regulatory organizations that supervise brokerage firms. After the cost for the system soared, Mr. Gensler and Biden SEC sought to stick brokers and investors with the bill. The American Securities Association and Citadel Securities sued. All three judges of the 11th Circuit panel, which includes Obama, Trump, and Biden appointees, agreed that the SEC's fees to pay for the system were arbitrary and I can't even say that word, capricious. Anyways, the cost of setting up the Uniform Electric Audit System exceeded the Commission's 2016 estimates by 8 times. So basically, it got defunded because of the cost. Okay, and this is obviously bad for retail because it causes an increase for risk market manipulation. Without timely CAT reporting, regulators may lack the granular data needed to detect manipulative practices. Okay, such as naked short selling or spoofing. Okay, which is what the GNS lawsuit is focused on. Pretty much is spoofing and naked shorting, right? But the majority is spoofing, and it's the easiest to explain. Some other bad things are a reduced transparency. Now, this data is still tracked, but it's not made public, right? So, market makers are able to use, let's say, payment for order flow to internalize your shares. So, what do I mean by internalizing your shares? I mean, when you buy on a broker that is payment for order flow, they don't route your orders to the open market, they put them straight to a dark pool. So, if we look at GNS here, uh, off exchange dark pool data, for a while you could see we've been in the 60s, 70s for a very long time, right? Way before October 13th, but this is as far as back as it goes here without changing the page. You can see the New York Stock Exchange volume was pretty low. Uh, GNS is on Amex, which is a New York Stock Exchange. Okay. On Friday, once the T1 halt came undone, the dark pool numbers were actually pretty high. I think believe it was in the 70% in the morning. It was on low volume, so can't really put too much on it. But I believe it was like 500,000 in volume, and the dark pool was like 70%. So that means that 70% of the entire volume was going into the dark pool. So all the buys were being internalized, right? Uh, Once that got undone, or once GNS halted the stock with a T1 to release the news on the lawsuit, we came back and the dark pool data came down. 14th was Friday, right? Yeah, so it came down as low as 32.92 off exchange. And if you see here on the screen, 40% of that went to the New York Stock Exchange, which, if you've seen after hours, let me bring up a chart here. I do not use Webull, so bear with me. All right, so if you look here, after hours, we had a nice move, a nice little gap up here. from around 86, 87 cents, and we moved all the way up to $1.41. Finally closing after hours at 50%, 50.65%, which is $1.30. Okay, so let's get rid of that. Oh, get rid of this. Oh, we can bring that up later, actually. So that's basically, without a cat system, it gives market makers, brokers, a way to hide the information, right? The tracking, because algorithms, everything is like fast, like super fast, right? Like way too fast, like no human can comprehend it. It's computer. It's algorithms. So when they do that, they internalize your shares and they get ahead of your trades. Okay, which means that they could prevent squeezes. They can control the liquidity of a stock, the volume. Okay, they get ahead of it, especially in stocks that have options. GNS does not have an options chain um, as we speak. So, how do you fight a manipulation case without the CAT system or a weak version of the CAT system? GNS decided to go with share intel. So this is share intel here. So share intel, think of it of like a private cat system. Okay? So they basically get the data a similar way that the cat system would do, and they track the action, right? They could see from price action and other methods the discrepancy. Is that a word? They could see what's wrong or what could potentially doesn't make sense with trading, right? Using their algorithms or AI or whatever they use, whatever share intel uses for their service. Okay, so give me 1 second. Again, we're doing all. I got things to do, so I'm trying to do this as fast as I can. Okay, so I posted this morning. I know most people don't understand this. I can explain it on a live or in a video, which we're doing right now. Think of a system that tracks alleged rehypothecation, failure to delivers that was defunded. Okay, that's the CAT system. GNS hired Share Intel. Think of it as a private system that is privately funded, right? There's still ways to discover. And by what I mean by discover is they could take this data to court and use it to fight the manipulation case and demand through discovery the CAT system data to verify everything, right? So this would put everything out in the open, if that makes any sense. Hopefully you're still with me. So to follow that up, excuse my doggy, nice little Frenchie. So basically, I posted after that, GNS and Roger Hamilton basically have them by the balls. They do. There's ways to prove the manipulation, especially spoofing. The whole DRS float and ERL dividend, the removal of the buy buttons, have made this even easier. Discovery will let it all out, so it's time they leave GNS alone. And what I mean about it's time they leave GNS alone is exactly what I just showed you guys. The drop in off exchange data, right? The drop in dark pool. So that's it's good to see that they let it run, as you can see from the share price currently, or at least where we closed after hours. So what am I talking about when I'm telling you that it makes it easier because of the whole DRS float and ERL dividend? Well, if you want to learn about the ERL dividend, I'll post a link to a video explaining uh, failure to delivers, and it's about the ERL dividend, right? But as far as the DRS float, okay, so let's do this as fast as possible because I got to get going here and I got to wake up early. So the floats, when it comes to GNS, is totally wrong, right? The numbers, if you look at Webull, are not correct. Okay, for one, the shares outstanding are not 87.81 million. I mean, they are currently, but in a few months they won't be, and I'll tell you why right now. Um, so it says the free float is 80.28 million right now. That is close to being correct, but that is not the shares that are available to trade, okay? It's much lower, so let's get into that. All right. Gemini. Okay. So, GNS had a 6K come out stating that the company issued 50 million ordinary shares uh, pending due to an asset purchase agreement, okay? However, those 50 million shares, which you would add to the shares outstanding, uh, cannot be used. The reason is Rule 144, which means these shares are restricted for 6 months, okay? So basically, what that means is that those shares cannot be lent out and cannot be used to short and cannot be sold. Okay, so those shares do not exist. However, that's going to take our total uh, number of outstanding shares to 139 million, give or take a few. Okay, I'm just giving you rounded numbers. So 139 million is the total float. But wait, you got to subtract the 50 million, okay, because the rule 144, you can't, those shares can't be used until the end of January. I believe it's January 30th. So that brings us back down to around the outstanding shares of 89 million. Okay, you with me so far? Okay, good. Now, of that total 139 million shares, 60.3 of those are DRS or locked up. That's including the escrow shares. So out of the 139 million, there's really only 83.817 million shares available in total float right now. Okay? So, if you're still with me, we're going on the next part. The sandbox, aka street name. This is what's held at brokers, okay? This is what a public float is. When you buy a stock or trade a stock, you, unless you're an insider or like Roger or something, you're literally buying from the sandbox, from brokers. That's where your shares stay. Now, if you could bear with me, I can't make my dog shut up, so you're just gonna have to listen with him. Sorry. I'll get. All right. I had to stop because my dog was being loud. Let's get back into it. Okay. Anyways, if you subtract the total shares from DRS, the 60% of the float, you're gonna end up with 55 million shares available. Okay, those are gonna be in street name, and if this doesn't line up perfectly, I'm sorry. I'm going through a million things right now in the background. I'm doing my best to explain to you. So the true public float, the tradable float, is 55 million, give or take. Okay, 53 million. Once you subtract the insiders, own shares owned by insiders. All right. Um. Now, don't worry about this. Now, let me show you something. When you look at utilization, okay, and cost to borrow, when you look at shares available and cost to borrow, okay, these are two different um, places you get information. I can't think right now. My dog's driving me crazy. Anyways, the one constant when it comes to supply, utilization, supply, shares available, supply, is cost to borrow. Okay, you cannot cheat the cost to borrow. You could cheat the supply. There's ways they could do it, and from what you've seen earlier with the CAT system or with the lack of the CAT system, they could get away with a lot, right? Market maker exceptions, PFOF, payment for order flow, um, internalizing shares, et cetera, et cetera. Okay, so if you look here, if the shares really went from 200,000 shares available to 900,000 shares available, the supply would increase that much. The cost to borrow would go to zero, right? That's common sense. I hope you understand that. Okay? The cost to borrow would change because the supply and demand changes. If there's a lot of supply, that means there's a lot of shares. That means there's no need to have a fee for cost to borrow. Okay? Now, if we go down here, there's probably we could find one the opposite way. Let's see, 600,000. Oh, here you go. I thought I saw one that was 93,000. Oh, here you go. So again, cost to borrow here, 17.88%, okay? 1.9 million shares available. Went down to 95,000 shares available. Okay, I'm giving you the other example of it going the other way around because they've been doing this both ways. Okay, the cost to borrow here went down from 1.9 million to 16.9%. I mean, from 17.88% cost to borrow to 16.9. Even though the stock became scarce, there's no shares to borrow. 95, right? If this was real, if this supply was real, this cost to borrow would be changing. This would have gone up. It wouldn't go down. It would have gone up. Okay? So the complete opposite of the other one. This is also verified through Ortex. Okay? If I go to the last one here, you see utilization. This is a split up by days, by the way, like one day, one day, one day. So utilization on this day was 64.5%. This is how many shares available are being utilized, and here's the short interest for float, right? Not for the sandbox, the public float, but for the entire float. So 64% utilization, 19.72 cost to borrow. Next day, no change in cost to borrow, like barely any change utilization, right? Next day, you have a huge drop in utilization, okay? Which is changing the amount of supply. What happened to cost to borrow? Nothing. Okay, again, you had a decent change utilization. What happened to cost to borrow? Basically nothing. Now, utilization goes back up the next day again. Goes back up about 8 points. What happens to cost to borrow? Nothing. It barely moves. It goes down. The short interest went up, right? So this is what's telling us that the supply being showed is not real. Okay? Now let me show you something in the chart. And I'm trying to do this so fast, so if I mess up, I'm sorry, okay? Now, in February, around February, GNS had a public float of 21 million. I know because I was day trading the stock. I've been holding it since around here when it was 25 or something. But I've been holding it since we came back down here. I was day trading it here up to about 150, but that's irrelevant. Okay? The main thing is around February, GNS had a public float, a sandbox at 21 million. It's now 52, 53 million. So what happened was GNS is involved in litigation, okay, on a totally different lawsuit, right? They had a stay put on GNS where they couldn't conduct business as usual or normal. So they were stuck. So they were losing money, and it's why you see the fundamentals being bad. I mean, before these earnings, they were worse, right? So they had to dilute the stock some, and the proof of the dilution is I'm about to show it to you, and why the sandbox is 30 million higher. So there had to be dilution here. They had to do an offering. I can't find the filing, but I'm pretty sure there's one around February or March. You're gonna have to verify it on your own. So what happened? The market maker, the brokers, whoever's involved in shorting the stock, okay, or is in the debt from the dividend. And again, if you don't know about dividend, watch the video that I have on that. It's the only video. I have two videos, this one and that one. This will be the second video. Okay, so what ended up happening was they ended up buying those shares, okay, throughout this accumulation area here. And when Roger started doing insider buying Bitcoin, speaking on buybacks, started doing buybacks, right? I think this was an insider buy. Roger bought around here. The stock blew up. And because it was a locked float, we ran to $1.92. Okay? This is where they stopped us. That those shares they accumulated here, the real supply, was all dumped on this way up here. These our shares being used by shorts, market makers, etc. Okay, and then we went into a zombie zone. You can see it just barcode. I mean, on the daily it looks barcodey. You can only imagine what it looks like here on the 15 minutes. Look at this, terrible, ugly stock, right? Whoops, daily. So this is where they got their supply from. There was real supply here. What ended up happening here when we turned to zombie stock? They used it up. We started seeing the bid and ask spread, something like this, right? Like 6, 7, 8 cents on the bid and ask, which indicates a locked float. Okay, the volatility on the amount of volume that we've had in some of these days is not trading like a regular stock. Okay, and when you put that together with the cost to borrow, the fake supply, and dark pools, I mean, we've had days where volume was look 500,000, 500,000. The day before it was a million, 11 million. You see what I mean? This is irregular. So I guess the whole point is that the supply is fake now. And the cost to borrow is showing you that that dividend is still owed and they're in big trouble, right? Now, what ended up happening after hours when we had that run yesterday, after we unhalted from the T1, and again, GNS is the one that halted the stock, okay, for pending news. Prior to being unhalted, they were doing their normal shady business, okay? If I go here and I go to exchange volume and look at dark pool data, this looks pretty good, right? The New York Stock Exchange or the lit exchange had 67% of all orders hit the actual market, which is the way it should be in trading in general. However, if you come down here and you track, this is from October 13th, but it's been like this for months. The dark pool numbers have been between 60 to 70 to mid 70s off and on, like consistently. Okay? The the New York Stock Exchange volume has been non-existent, not compared to what it was on Friday. Okay? So what it's showing us is that they have very little to no ammo. Now, why do I say that? If they had 30 million shares from an offering that they got, where we went from a 21 million public float to a 53 million public float, they used that up over here and doubled down on that run to 192, right? Now, even if they had a few million shares available, which if we go to Ortex, uh, you can see the shares on loan. It doesn't show the shares available on here. You can't really see how many shares are available. It's not going to be real data, unfortunately. And without the CAT system, anything like that, I don't know if it'll ever be tracked aside from share intel being done by GNS and Discovery, where they could get the real data. Okay, so let's go back to the chart. So the total volume before we got unhalted was, I believe, we were around 500,000 in the morning, right? After hours, we had over 10 million in volume. And as you can see, even if they tried to stop the stock, they couldn't. We ran up to 141, and here we are right now. We ended at $1.30, up 50% on the day. So what am I getting at? This is the whole point of the lawsuit, right? And this is the majority of the proof. You actually don't even need share intel to prove that these guys are internalizing shares in dark pool, that they're creating fake supply because there's no CAT system to keep them in check, okay? And the algorithms are just short laddering. These are short ladders, okay? You had buybacks, short laddered. Buyback, short ladder, okay? And now we got to a point where they filed the lawsuit. The stock hit scanners, volume started coming in, even though they have the buy button taken away from various brokers. I've heard, well, I know Charles Schwab because I got Charles Schwab. So Charles Schwab, Fidelity, um, Robinhood is fine. I bought some after hours, surprisingly, and it went through. And even Vanguard, okay? So all their attempts to pin the stock to continue, it was lost with the filing. Now we'll see what happens tomorrow. Do they still have any supply from over here? Or did they use it all up here? If you ask me, they used it up. Also, this is a beautiful accumulation. Um, if you're trading that way, I mean, if you put it on that 1 hour, you could see it's a giant move, right? Look at this. But anyways, that's pretty much catching guys up to where we are today. The true tradable float is around 53 million. Uh, there is a shelf offering. Okay, GNS did repurchase some warrants. The shelf offering, though, I don't see it being used because why would Roger be doing buybacks and insider buying? He's going to dilute himself. It makes absolutely no sense, right? So when people are telling you dilution and all this stuff, yes, at one point there was dilution, but it was not to the point that it ended the squeeze scenario. And as a matter of fact, they doubled down on it, and now they're even double or triple screwed. So that's an update for those that are new and for those that have been with me for a long time. That is that's what I have for you, and I did that as fast as I could. And I'm gonna upload this. And I'm gonna get out of here. So if you need to verify it on your own. I got stuff to do. I'm gonna try to stream tomorrow morning. So for now, make sure you like, you sub if you're new. Thank you to everybody that followed on X that I asked this morning, so I could do this for you guys. And yeah, that's it. I'll see you guys tomorrow. All right. Have a good one.